Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Satz, CEO of Alto, to discuss why investors are turning to alternative investments for outsized returns and portfolio diversification. Eric, it's great to have you with us. Thank you for joining us, and catch our viewers up on Alto. I understand you just went through a Series B.
We did do our Series B. The big news is about 8 weeks ago, we finally got our broker-dealer's license. And so we are in the process of launching the Alto marketplace, which will enable us to introduce buyers and sellers of alternative assets.
And this is, you're looking at $10 trillion in retirement funds here, introducing that capital. How does that exactly work?
So we have a wholly owned trust company, Alto Trust, together with our securities business, Alto Securities. We're very original in our naming conventions here. And so the thing about investing out of a retirement account is a custodian has to be involved. And so the trust company serves as the custodian for our clients. The securities business will introduce investors to issuers. And then the software platform is what enables everything to happen in a seamless, cost-effective way.
What was the rationale to develop the capital raise platform, and what's the response been to it?
So this all started out of pain that I experienced on my own trying to invest my retirement savings. And so the point here is to make it easy for investors to access those funds. 90+% of all investable savings for the 99% of us lives in these retirement accounts. And so we want to make it easy for you to access those, to invest in assets that most custodians won't custody. So the Fidelity, Schwabs of the world don't allow you to invest in these types of assets.
I'll tell you what, in terms of themes I've been covering this year, alternative assets and investments has been a really key one for me this year. Why are investors increasingly turning to that for portfolio diversification?
Well, this isn't new news, right? So conventional wisdom used to be 60-40 is what your portfolio should be. That has kind of gone out the window. And so the real question now is, okay, if it's not 60-40, what is it? I think many people would say, if it were possible, you should invest 10% of your assets in 10 different asset classes. That's really hard to do. So maybe you try 20% in 5 different asset classes. And the platform that we've built actually makes that achievable and accessible. And so when you get real portfolio diversification, you have reduced volatility and you have increased returns. And so I think everyone's really looking for those two things: reduce volatility and increase returns. Let's
discuss the market challenges that's in today's funding environment. Do you think we'll see a light at the end of the tunnel, whether it's Q3 or Q4?
I don't think it's 2023. I don't think I'm necessarily an original bearer of bad news on that front. I think it's 2024, probably second half.
What does the future hold for Alto? Are you planning to scale in a particular market?
So the Alto marketplace is our big effort for this year. And we were lucky and fortunate in the timing of our Series B, so raising cash really isn't an area of focus for us. So we will really focus on continuing to build the client base. We have about 30,000 clients now, 1.2 billion in assets under administration. So we'll continue to build on that front and really facilitate these introductions between buyers and sellers of alternative assets.
All right, anything else you want to share?
No.
No? All good. Well, I mean, to your point, fortuitous timing. Funding done in the environment where there's demand for alternative assets. So good timing on your part. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.